With the current situation in the market and in the economy, and with a possible massive recession looming, I personally think that there might not be a better time than ever to lock up some short duration CDs or certificate deposits, put some money away in the sidelines, and earn some massive yield while interest rates are still as high as they are currently. Now in this video, we're going to go over some of the best offers when it comes to CDs as of right now across different banks across the world. We're going to talk about some of the do's and don'ts when it comes to CDs in 2024 and some of the main things to keep in mind. Now, just as a side note, I personally have been buying a ton of CDs as of recently just because I think the market is going to see a ton of pain, and I plan on just sitting on my hands for a little while until all the smoke clears. So if you want to see all the best CD rates across the world as of right now in August 2024, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So first, before we go over some of the best CD deals, let's talk a little bit about the strategy and why, again, it'd be a good idea to buy into any CDs in the first place right now. Well, with different CDs ranging from 1 month all the way up to 5 years as far as durations go, you can buy into short duration CDs, sort of sit on your hands and not necessarily worry about that money and have that money earn a ton of interest while doing so. Now, this is because as of right now, but maybe not for long actually, the Federal Reserve's funds rates is still pretty high, which is exactly why CDs are still offering so much yield as of right now. But with the potential of future rate cuts right around the corner, there might not be a better time than ever to lock in some CDs before, of course, we see lower interest rates from here. Now, to go over some of the CDs and what we have as far as offers as of right now, Goldman Sachs is offering a 5.15% APY for a minimum of $500 deposit, which is not bad whatsoever. And this is for a 1-year term. Now, for me personally, I've been doing even shorter terms than that. I've been doing 3 months, 6 months, that kind of thing. And this is just because for me personally, I want my money accessible in the near term, but still 1-year term is not all that long. And to lock in a 5.15% yield, especially with the reality of lower interest rates very soon here, that's not bad whatsoever. Now, another thing I want to talk about, this is probably what a lot of you guys are wondering, are CDs safe? Is the money guaranteed? And are they FDIC insured? Now, this is a short answer is yes. CDs are federally insured by FDIC. The FDIC insures deposit accounts up to $250,000 per depositor, per FDIC insured bank, and per ownership category. This includes savings and checkings as well as money market accounts and CDs. Insurance coverage applies to the principal balance and any interest that accrues in a covered account. Now, even though CDs are going to be FDIC insured, as you can see basically at all of these, I still personally think that it's a good idea to really assess the risk when it comes to investing into any CD or really anything at that point. Ask yourself, do I feel comfortable investing my money for 1 year, even if it's only $500 with Marcus by Goldman Sachs, compared to something like Lending Club? Because even though they're all FDIC insured for the most part, I still think there's a different risk profile when it comes to your investment, and I think that's pretty evident across the board. Now, to go over some other offers as of right now, we have another Marcus. This one's at 5.1% for a $500 minimum deposit, and this term is only 6 months. So that's more so what I would be looking at. 6 months is not all that long. I think that the market and volatility will probably calm down by then, so I'm really looking for 3 to 6 month terms, but that's just me. We have a Lending Tree one for 5.2% APY. This is for a 10 month with a $2,500 minimum deposit. We have a BMO at 5.05. This is a minimum deposit of 0, and this is a 1-year term. We also have another BMO for 4.45 for a 5-year term. Now, you might be asking yourself, why in the world are they offering less APY for a longer term? Well, this is because banks are basically priced in the fact that the Fed's funds rates are going to be much, much lower in the future. So they're trying to hedge, and by doing so, they're not basically going to guarantee you and pay you a massive amount of money based off of today's interest rates. So by offering you a lower APY, they're sort of going about it that way. We have a Barclays at 5.1%, 0 minimum deposit. This one's 9 months. And then we have a 5-year at 3.75%. I personally would never invest in a CD for 5 years. That's just way too long for me personally. We then have some more alternative banks. I haven't heard of this one, but we have VO Bank, also FDIC insured, of course, 5.25% with a $500 minimum deposit for only 6 months. Now, even with some of these more risky banks, not saying that these two are risky. I honestly have no clue about either one of these banks, but I'm just saying when you don't know about the banks, if or if not you think they might be a little more risky, shorter duration are of course going to be your friend, because you're not necessarily hoping that a bank survives for the next, say, 10 years or something. 3 months, 6 months, both these banks, even though I've never heard of them, should probably be fine. Now, some more offers. We have Popular Direct at 5.25%. This one's a $10,000 minimum for 3 months. And this is because since interest rates are still high as of right now, they're basically offering you a massive yield for a short duration, which is basically what I've been investing to for the last month or so. We then have a massive 5.35% with a $25,000 minimum deposit for 1 year, and this is from Next Bank. Have not heard about that one either. We have First Internet Bank of 5.26% with $1,000 minimum. 1 year term, we have America First Credit Union 5.25%. 6 months, we have a 9 month, same thing, and even a 5.25 1 year with $500 minimum, and this is from Union Bank. Now, as we scroll through here, like I said, for me specifically, I would only personally invest into the big names with my risk profile, and that's just because I don't really want to lock my money away for a long time period, especially with a bank that I never heard of, even if it's FDIC insured. But as I keep scrolling through here, I'm looking for any other crazy deals, any other opportunities that I see that might be a good one. BMO with a 5.1 APY, 0 minimum 6 months. This is another one that I'd probably look into. And as we go down further, there's still tons of CDs offering north of 5%, which again, guys, that might feel normal in today's era because it feels like interest rates have been so high for so long. But I promise you, a 5% CD is not necessarily normal, at least not normal over the last 10-15 years, which means there could be opportunities to farm a massive amount of yield, lock in your money in a safe investment, and wait until the market settles down. Now, for me personally, I've been buying my CDs right through my trading brokerages, and depending on what brokerage you use to trade all your stocks and ETFs, whatever the case might be, you can probably also buy CDs right through there. Now, not only is this super awesome because you don't have to do any of the paperwork or any of the transaction fees or anything, but also it's all right in one place. It's all inside your portfolio. I literally have CDs right next to the stocks and ETFs that I own across the markets. So whether you buy CDs directly through a bank, through an online bank, or through a brokered CD, I still think right now, while interest rates are still much higher than average, there is a massive opportunity for those investors out there that want some guaranteed income, some guaranteed yield across their portfolios. Now, CDs are definitely not for everyone. A lot of people will say there's better use of your cash. It's better to put it in the S&P 500 or something. And although a lot of times I'd have to agree with them, I think that different investors out there like myself have different risk profiles, and having a portion of your overall cash, a portion of your overall portfolio inside things like stocks, bonds, ETFs, CDs, there's nothing wrong with that whatsoever. So now that we went over all the current CDs and some of the best rates across the board, as of right now, I want to hear from you guys down below. Have you personally ever purchased a CD in your entire life? Let me know yes or no in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.